So in today's webinar, we're going to cover reaching investors through financial media. So we've got a number of topics to discuss. We're going to be going through the day in the life of reporters, writers, and editors, different types of interviews, how to create a story framework, understanding the rules of media engagement, and lastly, there's going to be a Q&A at the end. So if you have questions, please feel free to submit them through Zoom. We'll aim to answer them all at the end, but if we run out of time, we'll definitely respond via email. So to discuss these topics, we've got an excellent lineup of speakers today, and I'll just introduce everyone briefly for the purpose of saving time. We've got Tom Burrows, Group Editor at Clearview Financial Media, publisher of Wealth Briefing Asia, and the Family Wealth Report. Tom was previously Wealth Management Editor of The Business, a weekly magazine run by the Telegraph Group, and a correspondent at Reuters. We've got Margarita Kirikosian, News Editor at Citywire Selector. She's been covering international fund selectors for over half a decade. She's also written for Citywire Deutschland and Citywire Switzerland. We have Richard Teitelbaum, Senior Contributing Writer at Institutional Investor, formerly a News Editor at the Wall Street Journal, a Senior Writer at Bloomberg, Investing Editor for the Sunday Business section of the New York Times. We have Bradley Sachs, hedge fund reporter at Business Insider, and formerly a reporter at Ignites. We should have Peter Tao Larson, EMEA editor at Reuters Breaking Views, formerly the Global Economics editor, the Asia editor, and a banking editor at the Financial Times. And finally, Eric Ulfelder, a veteran independent journalist who's written extensively for the Financial Times, the Wall Street Journal, Barron's, and notably has written 17 annual global hedge fund surveys, most recently one on hedge fund investing during the time of COVID. We also have members of the Peregrine team here. Anthony Payne, founder and CEO, Bill McIntosh, director, Irina Katstavitskaya, associate director, and over in New York, despite our accents, Hannah Beard, associate vice president, and myself, Darius Athel, vice president. So roll call over, welcome everyone, and thank you very much. So next slide, please, and let's dive right in. So we want to start with talking about a day in the life, or how reporters and writers' lives have changed. So that would be Bradley, Richard, and Eric. And I'd like to ask you first, Bradley, how's your job changed over the last 6 months? And what new challenges are you facing? And if you please keep the answers to around, a maximum of 2 minutes, that'd be really helpful. Yeah. So Bradley, over to you. How have things changed?
Well, thanks for having me on. And yeah, I think things have changed less than I think many people would assume, given the nature of a reporter's job. A lot of it's already texting, calling, emailing. A lot of it's already become digital. There's obviously a huge change in the sense that some of the best interviews, some of your best meetings are done in person. That's no longer happening. Grabbing drinks with people after work, grabbing a quick coffee with people before their day gets going. That was always kind of like the building block of meeting new sources and getting tips and information that you can turn into stories. So I think my days changed more in the sense of I'm spending a lot more time reaching out to people that I think in the past I would have just maybe waited to meet at an event or meet at a conference. Just being more proactive and saying I need to get a hold of them before I lose whatever thought I have in my head that I want to reach out to them for.
Okay, great. Thanks, Bradley. And Eric, your thoughts on how have things changed over the last 6 months for you and the writing you're doing?
Well, for me, I concur with what was just said. I've been tied up largely with the hedge fund survey that I do annually, and just an interesting anecdote, I think, where I look back at 5 years of history, and this survey, if I stopped it at the end of 2019, would have been thoroughly irrelevant. So what I found that I could take advantage of, being the fact that I needed more time to include the first quarter numbers, is that I ended up being able to reach out to more people. And what I'm finding is that more people are interested to be able to comment on an established survey process. And I found that to be very helpful in order to widen the breadth of people who are contributing to it, from allocators, investors, economists, historians. And I'm taking advantage of the opportunity this presents by making stories wider and more encompassing. And I think that's one of the distinct differences that being locked down in New York for a long time and focusing on just a few projects instead of constantly writing smaller pieces has enabled me to do. And I find that has created better stories.
Awesome, Eric. That's very insightful. Thank you. And Richard, your thoughts on how has work changed over the last 6 months? What's challenging you right now?
Well, I think one of the main issues that I've been grappling with is I tend to do longer form stories, which require typically, a couple of weeks of reporting, but my access has been limited. Surprising as it may seem to some people, when you're in COVID lockdown in a cabin someplace without access to your normal telecommunications, the first thing that comes to mind when I leave a message is, I got to get back to Richard. So what I've noticed, and I've noticed an impact on my stories where I would have had let's say 6 or 7 outside voices weighing in on a topic. I'm going with 3 or 4, much to my displeasure, to be honest. And my solution to that, as much as I can do it, has just been, frankly, to more frequently flood the zone. If I think I want 4 people commenting on a particular aspect of a story, I'm going to send out 12 emails, hook up on LinkedIn, do everything I can to get in touch with the sources where, because there's no, the likelihood of my connecting has decreased dramatically, and it's made the work more difficult. And I think as was just mentioned, the fact that I'm not meeting people face to face is definitely a hindrance. I'm not picking up research reports or information over coffee or drinks. So it's definitely required me to ramp up my efforts.
Great, thanks. And now thinking about, being a journalist, receiving media pitches, and thinking over this can be over the entire course of your career and drawing on that experience as opposed to just recently. But we all appreciate that, journalists receive dozens of emails all the time, pitches of all shapes and sizes. But what in your mind is the difference between a good and a bad pitch? I mean, Richard, if I could start with you.
Well, sure. I mean, the thing that I think any editor will tell you, because sometimes it goes right by reporters like myself, is you need, well, first of all, you've got to be tailoring your pitch to the person involved. I don't cover cryptocurrencies. It's just not something that either myself or my primary client, institutional investor, has been terribly interested in. And of course, that means almost by its very nature that half of all the pitches I receive are for the latest cryptocurrency fund or twists on that. And I appreciate the effort, but I think by this stage you should know. I think public relations people should know that institutional investors not going to be fertile ground for pitching cryptocurrency unless it's a great story. Number 2, I would say that, and this may not be particular to the COVID crisis, but I have noticed that there's one of the things people kind of forget about is that to make a longer form story interesting, and that's what I do concentrate on, is you need a narrative and you need tension. And the fact that a hedge fund manager has increased assets from 30 million to 70 million is not necessarily interesting in itself. That you've got to think through a little bit more. Well, who is the fellow you're pitching? What is the hedge fund? What have they? What are their challenges, and what have they overcome? And that is the beginning of putting together a narrative. And I think that's kind of fallen by the wayside. You just got to think a little bit more in depth when you pitch a story.
Awesome. No, that's very, very helpful. And then Bradley, if I could turn to you, being a Business Insider, I'm sure you receive hundreds of pitches a day.
Not that many, but I think the thing that bothers me the most about when I get pitched on something that just is of no interest is even if it's something that it might be in the field that I cover. So I read about hedge funds primarily, but because BI doesn't necessarily have a huge staff, akin to the Bloombergs of the world, I do cover different things within finance. I think it's more when someone comes with a basically pre-written story and says, here's what you're going to write, and here's the story, and here's what you should do, and here's who you should talk to, and here's the question you should ask. And I'm not someone who says good news isn't still worth writing. It's more that we're not a PR outlet for you. We're not your marketing team. Don't come to us with a preset story that says John Smith is the best person who's ever lived. Obviously, and I think has been said earlier, that's not necessarily something that's super interesting. I think most people, if it's written about them, would love to see that story out there, but I don't think anyone would read that story about someone else because there isn't really any tension or narrative to it. So I think just keep that in mind when you're pitching people, is that they don't necessarily want to be told how to do their jobs.
Makes perfect sense. And then Eric, your thoughts on pitches that you receive, ones that you think are good, ones that you think are bad. What stands out to you?
I think the way I look at pitches is a bit differently. The odds of receiving a pitch that's going to fit what I'm doing right now is very slim. What provokes me when I see a pitch is not necessarily what it's talking about, but how it's talking about it. And if I'm intrigued by the fact that I see a lot of thoughtfulness that went into it and creativeness, then I don't just dismiss it. I would consider that perhaps this company or who they're representing might be a worthwhile connection going forward. So it's like whether first date impression, as it were. And if I like the way and the thoughtfulness that went into the pitch, it won't bother me that I don't use it, because most of the times I have my own agenda. I come up with ideas that I think are actionable and are unique and are independent and objective, and that doesn't necessarily fit what most pitches are doing, but that doesn't mean I can't take advantage and develop a relationship with someone. So I look at a pitch not for what it is for itself, but as a reflection of perhaps going into the future, what I could do with that firm in terms of developing other ideas in which we could collaborate on. And I think that just exploits the potential of a relationship that might not have existed otherwise. And I think that's the most important thing that anybody putting out a pitch should realize, that it's not just what is in that particular idea, but how it reflects the way you approach an idea and whether it encourages the writer to seek you out in the future. And that's where the real value is to me.
Great. No, that's a really good take on it. That's really, really helpful, I think, for the audience. Let's take a scenario. You received a pitch, let's say, you like it, you're interested, and you've agreed to do an interview. What's your interview prep process? Do you have an expectation for every interview you want to get something out of it? I know, Eric, you've said it could be a relationship building thing, but perhaps Bradley and Richard, you think differently. So how do you view prep for an interview, having agreed to, yes, I'll speak to this person? What do you want to get out of every interview? Is there an agenda that you have?
I mean, I think anytime I say yes to an interview, there's a fair bit of research done. If it's someone that, maybe I had just a slot in my calendar on an afternoon, and, it might not be necessarily someone that, I'm dying to talk to, or it's about a topic I'm, really, really interested in. But at the same time, I do believe in the relationship building aspect of just taking a call sometimes. It's the quick preliminary checks of LinkedIn, past history, past work history, if they've written anything, Googling around, seeing if they've been in other news media. And then beyond that, it's diving into trends. If their company's doing something interesting, if they're working in a certain sector that's done something, for us, it's like, oh, you work for a healthcare hedge fund during a pandemic. Like what in the world is that like? It's nailing on that. As far as like getting something out of interviews, I think the goal is to get interesting information no matter how it comes about. And so it's kind of unique, I think, to every interview. I think the key thing is, especially if I'm interviewing someone for the first time and I don't have a previous relationship, is making sure they're comfortable with me and know that, I want them to leave the call not feeling like I'm going to write like the most glowing article about them, but that, if they have something interesting to say in the future, that I'd be someone that would be receptive to hearing it.
That's great. And do you, out of interest, do you set yourself, or are you set, do you do a set number of interviews per week, or have a set number of stories that you put out per week or per month?
My goals are, most everything I write is behind Business Insider's somewhat new paywall. So my goals are more around, the amount of people subscribing based on my stories. I don't have a set number of stories. I try to write, 3 to 4 times a week. Sometimes that's, if it's a busy week, sometimes I could put out 6 pieces. If there's, one bigger story I'm working out, sometimes it could be 0. And, the next week I have a longer piece come out. Interviews, that's just, that's more a nature of what's happening. If I'm working on a big piece, I could potentially have 6, 7, 8 interviews in a day. But there's also days where I go by where I strike out on everyone I reach out to, and that's just the nature of the beast.
Fair enough. No, that's very, very helpful. And then Eric, any additions to the sort of prep that you do before going into an interview that you've agreed to?
Let me just back you up just briefly.
Sure.
When I interview an asset manager, which is one of the most common types of interviews I do, I want to get their material as much as I can, whether it's a DDQ presentation. It tells me about how they're approaching things. Of course, background of the individual is helpful, but when I see the depth or the lack thereof in these documents, it makes me realize there's more of a challenge going on. That being said, assuming I'm going ahead with the interview, if folks recall how Tim Russett approached Meet the Press, I kind of modeled myself off of that, because I just thought he was brilliant in the way that he just didn't ask questions. He was ready to respond and to do follow-up questions when something didn't make sense. And that's one of the most important things a journalist can do to generate a more compelling story, so that they can make sure that an interview is flushed out as much as possible. Of course, you can do that in follow-up, but it's best to have it as an ongoing dialogue at the time. So I will order a sequence of questions based on the information I've received and prepare myself on what I would expect the answer to be, and if it's something different, I would then follow up on, say, well, I didn't expect that, or could you explain that more fully, because that's different than what I was hoping. And that is how you differentiate one manager from another, because too often there's the knee-jerk reaction for allocators or managers to provide plain vanilla answers because it's generally safe. As a journalist, we try to make sure we can get a little bit more out of them, not to compromise anything in any way, but just to better understand what they're doing and how to distinguish them from other managers. So my prep is key to making sure that I get the most out of the interview, so that it's of real value. Because if it sounds like an ordinary article after the fact, I probably won't do it, and it's essential for me to be able to create something that's distinguishable from the rest of the copy that usually you see out there, because there's so much out there. It's important to create something that's worth someone's time in reading, and that's what my goal is.
Great, thanks, Eric. And then Richard, any additional thoughts on what we've already heard about prep and your views around preparing for interviews?
Well, yeah, as I said, I tend to focus on longer pieces, which gives you the lead time to do things like in normal circumstances, you'd go to the person's college or high school, find out what they wrote in the college paper or stuff like that. That's out the window now. My favorite was tracking down somebody's favorite restaurant and finding out what they eat. So some of that is just, frankly, it provides color, but it also shows the subject of the profile, if it's a profile piece, that you're doing your homework and it actually kind of gets their attention. And if they're going to cooperate, which they often don't, makes it, but if they are going to cooperate, it kind of says, I better bring my best to the game. Unfortunately, that's something I'm not doing a lot of here. The schools aren't open, the restaurants aren't open. And as I had mentioned earlier on, people calling you back to discuss a trade that a hedge fund manager made in 2006. It's not the top of their to-do agendas.
That makes a lot of sense. Well, I really appreciate that. So look, I've covered off how writers and reporters are working right now. So now I'm going to hand over to Bill, himself a former editor, and he's going to talk with our editors about how they work.
Thanks very much, Darius. Well, as an editor, I can say that there's three key parts to the role. There's obviously selecting stories, which can come in from a number of sources, whether electronic media interviews or newswires or sources that you might know personally or a leak. And then there's processing these stories, and that's basically putting them into a hopper and making sure that you have stories over the course of the day. Some will come out more quickly, some will come out later, so that the deadlines are constantly met. And then finally, there's the packaging of stories, which is basically about selecting the target audience and making sure there's a narrative framework that addresses that audience, and most importantly, explaining very concisely up top what the relevance of the story is now and why a reader should use a few moments of their valuable time to read it. So without any further ado, we'll transfer over to the editors who have joined us on this call, and we'll just ask them individually to describe a day in the life of their role at their platform, and we'll ask them to comment on commissioning, editing, and then publishing stories on in their different publications. So to begin with, I'll ask Margarita if you would basically talk us through briefly a day in your life at Citywire.
Yes, thank you. So it's not much different, to be honest, from everybody else, but for me as a news editor specifically, it starts with monitoring the news and just looking out for what has happened on the markets and if there is anything interesting or different from what we had like a day before, let's say. But specifically for Citywire and Citywire's selector in particular, we focused a lot on fund data. So that's our bread and butter basically. And for us, as a result, a big emphasis will be if a fund manager is changing a role, if they're moving elsewhere. So these kind of things are going to be more or less hard news we will be looking after. But because again, we are focusing on fund managers and fund selectors specifically so much, we'll also be looking at how they are adjusting to very much quickly changing realities. Like, well, a very tangible example, Tesla lost its valuation quite drastically due to certain circumstances. And there are quite a few big hitters, fund managers who held Tesla in their portfolios. So we will try to react to that and reflect that in our coverage, where we will reach out to them and see if they still hold it. So that will be basically, trying to find out what is new and now, where is the conflict, and how we can cover it in the most efficient way. And obviously, if there is an announcement, which we also will cover if it's a big appointment, let's say, we always like to have a special something to add from ourselves for our audience. What does it mean for fund selectors?
Thank you very much, Margarita. Over to you, Peter. Breaking Views obviously is a commentary publishing platform, so I think you probably have a bit of a different way of operating, perhaps, than straight news operations.
Yeah, thanks, Bill. I mean, I think you're right. Basically, we're, my day starts, we used to start at Canary Wharf just before 8 o'clock every morning. Now, for the last 6 months, it started in my spare room in Northwest London, just before 8 o'clock every morning. But we, that's when we kind of get our group together, and we now get together online, and much like you, a news editor would be talking about the news, but really we're looking at it from a perspective of, are there any things that have happened that that our readers would expect us to kind of give them a view on? So that might be a big M&A deal. or it might be a piece of policy, it might be a development at a company, something that's, you know, a big change in financial markets, for example. Anything really that sort of that merits some explanation, some analysis, and where we kind of have really, we think about it in terms of having some value to add. And so so where we will talk about things, talk about these ideas amongst ourselves, and then our columnists will go and much like reporters really will go and talk to sources, you know, kind of on background, and try to sort of flesh out their ideas and their thinking about things. But we're, you know, I guess what we're really trying to ask ourselves is sort of what are the big questions that our readers are asking themselves. So that might be a response to a piece of news, but it might also be a debate that's going on at the moment about a company, about an industry, about something that's happening. You might be trying to sort of anticipate, you know, in an ongoing M&A situation. It might be trying to think about the options for the various companies involved, and sort of what their different, what their next steps might be. So it's quite a sort of creative process. But it does very much start with sort of you know, trying to stay on top of and almost trying to stay ahead of, if possible, things that are going on.
Yes, well, I think you do a very good job of that, certainly. Thanks, Peter. Now, before I hand back to Darius, we're going to hear from Tom Burrows, editor at Clearview Financial, and of course, the group editor of Wealth Briefing. Tom, perhaps you could just talk us through, you know, a day in your life as an editor of the Clearview platform and the different publications on it.
Well, thank you, Bill. Yes, well, at Clearview, we have three main publications. We have an Asia publication, a Europe, Middle East, and EMEA region publication, which is Wealth Briefing, and a third, which is Family Wealth Report, which is North America. And that affects my working day in the following way. The Asian site goes out just after midnight on a pre-published platform, which would be equivalent of 8 o'clock in the morning in Singapore. And then the Wealth Briefing, the day starts really when I'm sending out a big group email push to all of our Wealth Briefing subscribers, which is at 8 o'clock in the morning London time. And then there's another push that goes out at 1 o'clock London time, or 8 o'clock Eastern time in the States for the American site. Now, my day will start about 7 o'clock. I'll be doing rather late in parallel with what Margarita and others have said, is that I'll be looking at the news feeds, looking at the overnight emails, seeing whether anything last minute needs to be put onto the site before I send out the Wealth Briefing edition at 8 o'clock in the morning. A good example of that might be any big bank result announcements coming either out of continental Europe or indeed in the UK by the time of this 7 o'clock London Stock Exchange when they start the filings. So I will go through all of that and check any other messages, quickly scan any rival news sites to see whether they've got stuff that knew that we had, or possibly to make sure we hadn't been gazumped or scooped. So obviously some rival sites are behind paywalls. They don't want me looking at their stuff. Very wise. In other cases, I can see pretty much what else. So I'll make some judgment calls about anything I need to chase or to make sure we're on top of. And once the 8 o'clock send out in London has gone, and after catching my breath, I'll then fire a quick email to my reporter colleagues to just let them know about the stuff that's come in that we might need to start chasing. After some calls, I'll then probably have a sort of a mid-morning editorial prayer meeting done by a mixture of some of our digital channels and also with some phone calls or a quick conference call to say, you know, these are the stories which are swirling around. We need to prioritize and then decide what we want to do. Just to stress with my news service, because we have three main platforms, we normally have, it's a daily publications schedule. So we have, each website is updated once a day, Monday to Friday. We don't publish at weekends. So that means I normally need at least between 5 to 8 stories per edition per day. So some of those stories will be pretty short. There might just be fund launches, certain kinds of moves, smaller M&A transactions. ranging all the way up to really big announcements, big regulatory changes which might affect a whole industry. I'm going to give you a real world example. When the SEC changed its accredited investor rules last week, that produced a big flurry of commentary from the wealth management industry in the States. And then we did a rap about that. So it's quite a lot of work that I have to do. And with my editor's role really involves being conscious of the most important thing to get for deadline first and working back from that, as it were. And secondly, being ruthless enough to know which stories, frankly, even if they're interesting, don't make the cut in terms of the time budget that I and my colleagues have got. And the one thing I've had to learn for many years, and I used to indirectly work with Bill, is knowing you have to be ruthless sometimes in terms of how much you can allocate. Another point I would make about the general approach I've been taking to editors since the pandemic started, because I think that I've heard what some of those on the reporting side have said, and it applies to editors too, I think, is that I've been very keen and very determined to make sure that my publications don't get swamped by the pandemic news agenda, because there are other stories and other themes that can easily get obscured, and our readers, I mean, each of us are subtly different, but we're very much a B2B publication. We're read by people working in professional wealth management. What they don't want to have happen to them is to be blindsided by news stories which have come up, as it were, on the outside, which have not really been properly tracked. So one of the ways that I try and filter the story agenda is to try and seize on stories sometimes, not because they're deliberately non-COVID related, but because if we don't cover them, there's a danger they'll just be completely ignored for quite a long period of time. So we're trying to add value by looking for things that go beyond too much of the narrative of the day, if you like. So those are my thoughts,
Sure.
At least to start with.
Thanks very much. Well, I think ruthless is a good word, and it's a word that every editor has to practice to a smaller or larger degree. And with that, I'll turn back to Darius, who will look into what makes a good story. Darius.
Thanks, Bill. And look, that's been really interesting hearing from both the reporters, writers, and the editors. So now I just want to ask all of our panelists, in their minds, what makes a good story? And perhaps when they explain some characteristics of a good story, and we've got some up on screen here, and they don't necessarily have to stick to those, although we've heard people talk about the importance of a narrative. Feel free when I ask you to talk to perhaps an example, and it doesn't have to be recent, across your career, of perhaps one of the most exciting or impactful stories you worked on that had some of these attributes that made it a good story. So I hope I'm not putting anyone too much on the spot, but Margarita, I'll start with you. What makes a good story, and perhaps if you've got an example of one that really stuck out that you thought was really interesting that you worked on?
Well, I think there are several examples that I can mention, but one of the most recent ones was with Wirecard scandal. So for everyone, well, probably everyone knows, but just to describe it a little bit, the payment company Wirecard was just committing basically fraud. And what was important for us, again, when you are looking at stories like that, is to find out how to angle it from the perspective of our readership, which is, in our case, international fund selectors. So a lot of them hold funds that have Wirecard as part of their holdings, right? So that's one element of that. And secondly, there is a lot of interest and a lot of focus on ESG, so environmental, social, and governance elements of fund management. And there is a lot of concern about greenwashing. So what we did specifically, we went and looked at the funds that are claiming to be high-level sustainability integrated funds, which held Wirecard shares, let's say. And then we reached out to asset managers and fund selectors asking what did they expect from fund management companies, what they had to do, how did they have to safeguard their portfolios, and how they're going to change their procedures going forward. So as you probably, I think you have it on the slide, it's kind of like there has to be something, well, conflict, controversy, which in this particular case was Wirecard and funds that claim to be sustainable holding it, and what they kind of like are doing about it really going forward.
Awesome. No, very detailed. And that's a great example of the story. So thanks there. Bradley, we'll jump stateside. Your views. I know you were the first one to talk. I think the first one to talk about narrative and its importance. But any other characteristics that you look for in formulating a good story or seeking out a good story, and any examples of big pieces that you've put out that you thought had these characteristics?
Yeah, I think, I mean, the 6 bullets on the screen are pretty easy to track. Characters to me drive the story, and I think just about everyone will, has heard the phrase that, people don't necessarily read about companies, they read about people. So if you have like these colorful figures in hedge fund world, there's quite a few of them, which makes it easy to write about. If you have these colorful, powerful figures, it's easy. Narrative comes from that. You don't need much more beyond a couple billionaires fighting with each other to have something really interesting, especially if you can get inside and get the details. I think the story that immediately comes to mind that kind of touches on a lot of this is something I worked on fairly early in my tenure at Business Insider. So it actually came out last year. But it was around kind of this rivalry between Citadel and Balyasny. And, I was able to get, an email that Dmitry Balyasny had shared with his staff that was kind of scolding them, that Ken Griffin actually showed at Citadel's like annual meeting, basically saying, we're beating them. This is what they're going through right now. We're better than them right now. And it's these two very powerful people. Obviously, Ken Griffin's one of the most powerful people in finance, that have this very, weird kind of rivalry. And they, it helps that they live in the same city. They're probably in, similar social circles. So that's one that immediately comes to mind. And that was, the result of this trying, you kind of watch the people move back and forth between these firms, and, there's gotta be something else to it. And just digging in further from there. But yeah, I mean, that's when I think.
Awesome.
When I think good story, it's characters for sure.
Great characters, great story. Nope, couldn't agree more. Peter, your thoughts?
Yeah, thanks. I mean, there's many good candidates. I guess one that I would highlight that we've been writing quite a lot about in the last few weeks is the IPO of Ant Group, which, for those of you not familiar, is the financial sort of affiliate of Alibaba, the big Chinese e-commerce company. And I think what's interesting about it, I mean, obviously it's going to be an absolutely massive IPO. I mean, I think the sort of ballpark numbers have been talked about. It's a valuation of, raise about 30 billion and be valued about 200. So it's huge, but it's also a kind of just a fascinating window into Chinese technology, Chinese finance, Chinese corporate governance, all those other things, and they've just published a massive prospectus, which we've been sort of picking apart. But I guess what I'd like to highlight about this is, this is where sort of longevity kind of, and I would say this is an old fart, but the longevity sort of kind of has its advantages, which is that we've been sort of tracking, and I personally have been sort of tracking and trying to understand this company for like the best part of 5 years. And in fact, when I was based in Hong Kong, in fact, longer than 5 years, because when I was based in Hong Kong, so I think probably in about 2014, 2015, I went to Hangzhou to meet with the people at Ant, what was then called Ant Financial, really just to try and get an insight into that business. And so to kind of be sort of trying to look at something that's pretty opaque from the outside for a long time, and to then have it open up and reveal its financial secrets, even through an IPO prospectus, is pretty interesting. And of course, in that situation, you have a much better idea of what it is that you're looking for. And I guess the added thing I would say is the advantage of coming at that from a sort of commentary point of view rather than a straight news point of view is also that you can then start playing around with scenarios with the numbers. So my colleague Robin Mack the other day published an interactive calculator, which basically lets people figure out what they think this company should be worth by playing around with some of the key metrics. And so I think that's one of those stories where it's really nice to see that time invested and all that kind of that mental effort sort of come to fruition in something really big.
Awesome. No, it definitely sounds very satisfying. I love the calculator idea. Just sort of bringing different types of multimedia into journalism, making it, even more engaging. Eric, your views on what makes a good story? Any stories stand out to you?
Yeah, I take a little different take because I approach writing as if I'm an investor. And I think what helps me link to my sources better. I appreciate a good character-driven story, but I actually will seek out a manager, if I'm writing, for instance, on a hedge fund, by scanning databases like from Barclay Hedge. And what excites me most is when I see someone who has consistently performed well throughout difficult markets, is running a relatively small amount of money, and has basically flown under the radar. And being able to discover somebody who has talent but is unrecognized really is one of the goals of my work overall. And being able to encourage them to open up and speak if they wish is part of that process. And I've done that a number of times in my fund profiles as well as in the surveys. And it's discovering undiscovered talent, which is a great pleasure of mine. On the investing side specifically, I think one of the most intriguing stories I wrote about was about preferred shares. It's a corner that doesn't get a lot of attention, but again, that goes right to the heart of what I try to find. It's the stories that don't get reported upon. And during the great financial crisis, Royal Bank of Scotland got their head handed to them because they relied so much on preferred shares, and the European Union Competition Committee said, listen, the bank has been bailed out by Britain. We think some pain needs to be shared to your investors. So what happened was their preferred shares were forced to suspend their dividends for 2 years. This suddenly, cut the valuation in half because the bailout by Britain had brought back value to their preferreds, thinking they would perform. What's fascinating is that everyone became scared because this was a territory that was never explored before. What happens when a government entity tells you you cannot pay a dividend? It turns out that some of the shrewdest investors, including some very good hedge funds that I know, saw this. And so when they looked at a $25 par preferred selling at half the price, they simply looked at it as a zero coupon bond in which it would go back up to close to its par value once the dividend was turned back on. The question was, would the regulators over at the Competition Committee extend that suspension period beyond 2 years? Because no one has ever seen this before, but it was basically a slap on the wrist to force the sharing of pain, and after 2 years, the suspension was lifted, the shares came right back up, and it was fascinating talking to the investors who were actually seeing the opportunity and not scared by it. So you were dealing with something that was rather historical in terms of it never having happened before. It was in the context of the Great Recession when it was difficult to find more certain opportunities for income rather than just equity. And it explored how to exploit a difficult situation and turn it in favor of a good investment. And I think that is probably one of the most ideal examples of how I look to discover opportunities which segue right into what investors are looking for. And that's what I try to write. I try to produce copy, whether it's about fund managers, specific investments, currencies that have meaning and actionable meaning to those who are reading it. And that's what drives my work. And if I can find good characters behind it, that's icing on the cake. But I'm driven more by what I hope readers can take away from my research in terms of potentially investing in the ideas that I've developed.
Awesome. No, very detailed, a lot of different perspectives there. So that's great. Appreciate that, Eric. Tom, your thoughts?
Yes, thank you. What makes a great story? Well, I would, in terms of the readership that we are catering for, which are the professionals who are often C-suite or middle or senior management at wealth management firms, private client law firms and the like, I'm always thinking to myself, what sort of news would they want to read that might give them an edge in terms of making their business stronger and more profitable? I'm always thinking that's one of the sort of thoughts I try to drum into people that write with us as well. And so one of the things I would look for is a story, for example, that makes people think, blimey, I didn't realize that before. Maybe we should check this market out, or maybe we should treat this market more in a different way. Practical example, a few weeks ago, I was talking to Mishcon de Rare, the law firm, one of their most more outspoken partners. I don't think you can work for Mishcon de Rare and not be outspoken. I think it's kind of a job. Where the guy was in question was telling me about the problems with the big series of automatic information exchange treaties for dealing with tax evasion, known as the Common Reporting Standard. And he explained to me in great detail, in fairly scary amounts of detail actually, how so much of the information that governments are swapping with one another is basically being vulnerable to cybersecurity breaches of one kind or another. So here you have this great structure set up by various governments under the auspices of the G20 to swap data to track down people for doing bad things with tax money. And yet at the other end of the room, you have the whole juggernaut to do with cybersecurity, and you also have all kinds of contradictory regulatory forces all smashing into each other, like GDPR and other real pressures to widen knowledge about beneficial ownership of trusts and offshore companies and the like. And what fascinates me about that kind of story is that unless you've got someone who can join the dots, is that it won't be apparent to readers about how one piece of activity over here affects another piece of activity over there. But I see part of what my mission is, without sounding too grand about it, is to join the dots for readers who are trying to make sense about how their part of the business slots in with something else. So, for example, if you're a private bank and you're trying to work out where you want to redeploy your booking centers, or whether you want to consolidate your centers or maybe open another office, you would read something like my work to get a sense about where you need to be. Another example of a story which I think fits with the sort of thing I'm trying to do is that we've done a number of stories over the years about what is called behavioral finance. And we're now beginning to see examples of how this particular methodology is starting to affect how wealth managers keep and retain clients and put it to work. And what's satisfying there is where I'm able to, again, to join the dots between earlier studies that we've written and then connect them to how there are now practical effects on the industry today. And so another way of thinking about what makes for a good story is this story going to really make the people who read it perhaps even change the way they run their business? So it won't just be like, oh, that's interesting. It'll be, we get feedback from people saying, we've actually circulated your story around the office. We've told people to read it and put it into action and come back to us. So that's the sort of thing that I look for. I mean, obviously, lots of good human interest is important. This is a people business we write about. There's got to be a clear narrative. And I would also stress, I shouldn't have to in front of an audience like this, that just because we're writing about what can be often quite technical financial stuff, that there's no excuse for jargon. And I'm fairly medieval about it. I think that the skill of being able to communicate a lot of these quite complex moving pieces in simple, plain language, that's my Reuters background, really is still essential. And I think that that's something which I will strive to do. And I strive to make sure that the people whose work I edit do as well.
No, that's great. I think, look, actionable insight, that's always helpful, essential. No jargon, definitely not. We hate jargon. And then finally, Richard, your thoughts on what makes a good story, perhaps an example of one that stood out in your mind?
Yeah, sure. Well, I go back to the, I think it was a Time magazine editor who said, and there's some version of this, I'm sure, in every publication, that there are only two types of stories. Oh, the glory of it, and oh, the pity of it. And he probably overstated it. But I think what he was getting at is that you really want stories that have a kind of impact, but you shouldn't narrowly focus yourself on saying it's got to be a $60 billion hedge fund manager. It can be, as Eric mentioned, and one of the things I've been enjoying over the past couple of years is writing about kind of gee, people who kind of came out of nowhere to start these entrepreneurial businesses in asset management. And I've really, enjoyed, and I've learned a lot from them. And I think readers can. When you get the guy who chucked his medical career to go successfully become a short seller, well, that speaks to a lot of people on a human basis. The former Bain Capital guy who turned against the private equity industry. I've really liked learning about these 30-somethings who've gone out and sort of been trying to, make their mark. I do want to, there is one story that I'm going to recommend. It's on Institutional Investors' website, and no, it's not mine. But I am speaking my book because it's the editor, Kip McDaniels, did a great piece called Everybody Hates Ross. And it's kind of it's a great narrative with great detail about a mid-level guy at State Street who got sucked up into mispricing some securities, and Kip went off and interviewed him right before he was going into the slammer. I mean, I think he went from the interview into state prison within an hour, Great read, great stuff. At the end of the day, I think you got to say, who's your audience? How do you impact them? What kind of, how do you change the way they're looking at the universe? And whether that be looking into conflicts, giving them the insight into a situation or a story that they wouldn't have otherwise found. That's where I like to go. And I always like to defer, if I can, to an individual. If I can tell the story through their eyes, I think that just makes it that much easier. But it's not absolutely necessary. As Eric was talking about the preferred stock, maybe you don't have to zero in on a exact a certain person. But I'm sure with all the talk I'm hearing about preferreds being bulletproof in a zero bound economy, I can't imagine that not being incredibly important for a variety of investors.
No, that's great. Thanks. And if you haven't checked out that II story, definitely do. It is an excellent read. I think, look, some really great stories from across the board there. I'm going to pass back to Bill now, and just so that the panelists we have can perhaps touch upon specifics of their publications.
Thanks, Darius. Obviously, in the last 20 years or so, financial journalism has become much more specialized, and that's meant that there's been increasing specialist coverage and content. So we wanted to just have a brief reference from each of the panelists, both reporters and editors, about what type of story works best for your publication. So I'll start with Eric, because as an independent journalist who has worked for filing stories, I should say, for the FT, for the Wall Street Journal, for Barron's, and many others, he has a bit of a different perspective on the types of story that works for him, because it's obviously not a platform that he's working for. So Eric, please take that up.
The kind of story that works best for me is what you're asking, Bill?
Yeah.
Not to repeat myself, but I will. It's finding opportunity that maybe much of the market has missed. And that's what gets me going every day. And it's, for instance, when I was doing a book for Bloomberg on investing in the new euro, part of the model that we had created was a macro look at the nations that were in the euro, sectors, and then specific companies. And I was reading an article in The Economist back in the late 90s about no peanuts, and it was about Ryanair, which I hadn't heard of, and which was relatively new, I guess, to many folks, except perhaps those who were in the low-cost airline business and who knew the startup. And they had modeled themselves after Southwest Airlines. They intentionally did that and worked closely with the folks at Southwest. and it seemed like they were just at the beginning of deregulation in Europe and was able to be like first ones out of the gate to exploit the new freedoms that deregulation provided the airline industry. And it was exciting to find a company that was relatively unknown. It did trade here as an ADR, I think even back then, and people would say, I've never heard of it, and it was also somewhat contrarian because the idea was airlines are things that best you might rent, but you don't really invest in for the long term. And Ryanair had turned out to be one of those companies that turned out to be a very good long-term investment. As risk has changed throughout the years, and I think shorter-term risk is something that I'm focused on, perhaps because I'm growing older too, and I'm more aware that I don't want to extend my risk too far out into the future. Seeing short-term opportunities are also intriguing. Preferreds can be interesting for that reason, but there's also another obscure exchange-traded product called exchange-traded debt, and these are smaller $25 par bonds, and it's very exciting when you can see a bond that's out there that doesn't have a lot of following because of its very nature being exchange-traded as opposed to institutionally traded, and often mispricing occurs. And to be able to show people that opportunity and to say this is the same quality instrument as its institutional version, because often they would have bonds that are trading at $1,000 par. And it's very exciting to say you can actually see this on the pages of Barron's, or if you go to Quantum Online or any other sources that actually cite this, and realize you're getting an investment grade bond. It's going to be callable, and I've seen instances after rates have collapsed that you have outstanding bonds whose coupons might be 6-7%, and you know that they can refinance, and you look at their first call date, and odds are they're going to do that. And if you do the math right, if it's selling at a premium, you net out that premium, what do you end up with? This is what to me is an exciting story, because people sometimes, and this is just a very specific example of how I work,
Sure.
will ignore a premium on a preferred, thinking I don't want to take a loss. But if you're getting enough dividend payments that make the annualized rate of return by the time that call comes still worthwhile, that's actually getting the best of both worlds, and you can take a tax loss to boot. And I think being able to think like an investor and to find opportunities where people are not looking is what drives me the most.
Cool. That's excellent, Eric. Thank you. Over to you, Peter. What type of story do you works best for breaking news, given that it's a commentary and analysis platform rather than a straight-ahead news service?
I think. Well, I mean, there's a range of things that we're interested in. You know, we're interested in investment. We're interested in unpicking government policies. We're interested in sort of identifying and kind of exploring some of the big trends that are shaping the way businesses make decisions. But I still think, for us, you know, it's kind of hard to sort of look beyond a really big and kind of messy cross-border contested M&A situation, because I think that's something where we can really add a lot of value. I think one of the things, you know, partly just by analyzing the kind of the financials of the deal, but also by one of the advantages of writing commentary rather than news is it allows you to play around with scenarios. And so when you have, you know, company A is bidding for company B doesn't want to be taken over, you can sort of put yourself into the mind of the people sitting in the boardrooms of these companies and start trying to think through different scenarios that they will be exploring. Is there a white knight who could come and buy company B? Is company A making itself vulnerable by bidding for company B? Are the regulators going to get involved? Are the politicians going to get involved? What are the investors going to say? How do the hedge funds feel about it? What are the ARBs? How are they positioning themselves? What are the different sort of things, you know, legal challenges that might happen? And so you can sort of, and it's not like we're making this up. I mean, we'll be talking to M&A advisors, lawyers, bankers, executives, even PR people. But very often what we're trying to do is almost sort of see around the corner for sort of where this story is going to go next. And when it's done really well, then actually you find that by the time the denouement or whatever it is comes, you've already sort of anticipated that and kind of given your readers a kind of a way of thinking about the most likely outcomes and things that might happen. So, and I think when those situations, and they can be really big and messy. I mean, like, so an example would be, the current example would be the LVMH Tiffany situation. So we've been writing about that deal since LVMH first expressed its interest in buying Tiffany, and now it's gone into a whole new sort of phase with this bizarre attempt to try and walk away with it, with a letter from the French government. So that gives us, again, we can then sort of think through the next steps and try and sort of anticipate what's going to happen.
Thanks, Peter. I think it's clear that journalists and platforms are looking to get out in front of stories and really be able to guide their readers through them. Following up on that, Bradley, would you be able to give us an example of the type of story that works well for Business Insider?
Yeah. So I think, you summed it up. Everyone wants to be first, always. I don't think that's unique to any type of publication. I think for BI especially, our audience is a little bit younger than a lot of outlets, especially financial outlets. And so we find ourselves writing a lot about kind of like emerging trends. Whether for myself, it's been writing a lot about data usage within hedge funds and how that's changed, and even writing about the companies in the data world that make kind of that ecosystem. We've got a lot of reception to that type of story. And I mean, for us, we have so many different verticals that, when people come to us with a story about, potentially something that would work on corporate strategy or career advice almost, that's not something I typically write, but we have so many people that write those type of pieces that I think that's kind of why I get such a diverse array of pitches, is because we do cover just about everything, and more often than not, if there is something interesting within a pitch or within an idea, there's someone that at BI that would be able to write it up. I mean, for me, we're always looking for something new. I enjoy writing about the biggest personalities in the industry, so if you're working with someone who you find colorful, I'm certain that would make a good story on our end. But yeah, hopefully that was
cool.
Try to keep it concise.
No, that's very interesting, because obviously Business Insider has some very colorful coverage. Now, for the next part of our presentation, I'm going to hand over to Anthony, who will discuss just a bit about creating a story and how you go about basically creating your own story. Anthony.
Thanks, Bill. So key to getting the best out of engaging with financial media is proper preparation. And the first part of that is understanding what reporters and editors need, and hopefully we've done a lot of listening to that. The second part is to have a clear understanding of what your story is, your narrative, which we've also been hearing about. Ultimately, the successful engagement is not only about answering questions from a journalist, it's about having an engaging, differentiated, relevant story to tell, and the successful telling of that. So the best way to start is to organize your core messaging into a framework, sort of narrative framework. And so, for example, if you're an asset manager, your framework might be like this. Key message one: how do we see and understand the market opportunity set and the drivers of that opportunity set? Key message number two: what's our edge for addressing that opportunity set? Key message number three: what's our process, team, culture, values to deliver that edge? And these key messages are accompanied by proof points, evidence, case studies, data, graphs, charts, etc., which serve to validate your messaging, but also help you make that messaging come alive and connect and engage with the reporter. All of this is summarized at the top with your headline message, your elevator pitch, if you like. And to make the story framework as memorable as possible for an interview situation, you might also turn it into a mind map. Next slide, please. This example is a mind map we created for the chairman of of a Chinese asset manager, Harvest. So in this case, our chairman was being interviewed by FTFM, and given his position as an extremely well-connected Chinese entrepreneur, one can only imagine how easy it would be to lose control of Harvest's story framework. Plus, of course, English was his third or fourth language. So what's on this mind map? Well, the central proposition is if you're going to invest in China, you should be thinking about doing that through Harvest. On the top left, some key points about why to invest in China. Top right, what's the problem with investing in China? Inefficient markets. Bottom right, so what do you need? A deep knowledge of the markets and a very sophisticated approach. And then bottom left, and these are the key points that Harvest can bring to help you navigate the opportunity set successfully. So that was, next slide. This is how the whole process can look, therefore. So you've done the hard work on the left, which is organizing all the information into a framework. You've made that as memorable as possible with a mind map, in this case, preparing this individual for the interview. He's obviously practiced that, and then the interview itself was successful with all of the key messages in it. So hopefully that's just a very quick gander at how you can think about organizing your story into frameworks, which can then be very successful. And we talked again about the hero's journey, thinking about that narrative context as well. That can be done too. So now I'm going to hand over to Hannah. She's going to talk about the next aspects of preparing to be effective at engaging with the media, which is to be prepared for different interview formats. Hannah.
Excellent. Yes, thanks, Anthony. So preparedness for any interview not only means that you need to have your key messages prepared, as Anthony said, but also how you're going to convey them dependent on the mechanics of the interview itself. So the type and format of the interview can dictate the way that you're able to communicate with your audience. And therefore, it's really important that you're ready to interact with the journalist appropriate to the setting. So for example, a print interview, these are longer form. These allow for longer answers. They can last for 30 minutes or even over an hour, and they give you the ability to fully explain an answer. However, this doesn't mean that you can take the opportunity to give as lengthy an answer as possible. The best interviews are conversational with the journalist rather than just a monologue. Conversely, TV and radio, these usually only last for 2 to 3 minutes dependent on the segment, and they're often driven by the day's news agenda. So not only do you need to have your key messages prepared, but you also need to be able to weave those into commentary about current events. And don't forget, these are really unusual times at the moment. So it means we can easily fall into common pitfalls in an interview. We're all at home in a place of comfort, which often may lead us to have a false sense of security, particularly with live TV interviews, maybe. There isn't that usual process of going to the studio, sitting in the green room, preparing with producers and sitting behind the camera or microphone with the program's anchors. But ensuring proper preparedness for the type of interview being conducted also involves fully understanding the rules of engagement of any interview, which Arena will now take us through.
Thank you, Hannah. So before doing any interviews, you have to explicitly agree in advance what the spokesperson can and cannot speak about. Are there any contentious topics which could cause potential damage to the brand? Any red areas that need to be addressed and carefully messaged? And finally, the rules of engagement, factors that you need to take into consideration when dealing with journalists. So here we have outlined 7 of those rules. First, we have on the record and full attribution. This is where everything that is said during the interview can be attributed to the spokesperson. Next is interview on background, quotes to be agreed. This one is quite self-explanatory. This is where the interview takes place on background and quotes are agreed following the interview. Decline to comment is often included in the story to show that the company was spoken to and that the story likely includes information given on background. For example, with Bloomberg, they want their readers to be able to trade on stories. So if it says company can't be reached, that lessens the weight of the story versus decline to comment. The fourth rule is on the record denial. That should be used as a last resort. However, even if you tell the journalist that the article is wrong, he or she would still run an on-the-record denial if they have 3 sources, which is exactly what the next rule is. 3 sources saying they have specific news on the client. We would always endeavour to secure with the journalist 24 hours to respond and to find out more information about the sources and the information they have. Next is off the record. This is where a spokesperson has a conversation with the journalist, but none of it can be attributed to them or used in the article. It's a strange beast as there is no legal binding and we're completely relying on the journalist's word. One big rule across all of these factors is for the spokespeople not to say anything that they don't want to see published. Lastly, we have on background, quotes can be used but cannot be attributed to the person who gave them. So you would have noticed that some articles include the spokesperson's name, stating that they declined to comment, which usually means that everything that is published in the article has been reviewed by the spokesperson or their PR company. And if the journalist has other sources, they can go ahead with publishing the story. And finally, we have the three scenarios of what is unlikely to happen. One is a journalist allowing you to read the copy of an article in advance of it being published, and I'm sure our participants will agree with all of these, allowing you to change your quotes unless they're factually incorrect, and allowing you to deny permission for the interview after it has already taken place. So these are the key rules to bear in mind when it comes to media engagement. And on that note, I believe this is the end of our presentation. We will now move on to the Q&A session of the webinar. Bill, over to you.
Thanks very much, Irina. Much obliged. Because we're running a little bit over time, I thought that we just finally have a brief round robin to all the journalists with probably the most interesting question of the day, and that is, of course, the U.S. election. So turning to the presidential election and financial markets, I wanted to ask each journalist, what angles do you expect will drive your publications coverage over the next 7 or 8 weeks leading up to November the 3rd? And I'll start off with you, please, Margarita.
Thank you. One of the things actually is quite timely because we are working on the next issue of our magazine, which is looking at the US elections from the investor's perspective. So for us, again, it's coming back to things that my colleagues said as well, that it has to be tied to the audience. So what the audience's needs are, and for us is European fund selectors, and that means how will their assets, meaning fund managers, will be impacted by one or the other outcome. Well, one of the stories I am looking at the moment, for example, is the impact on the renewable energy, let's say, of either outcomes of the election. So that's kind of like the kind of story that we probably will be likely pursuing in the following weeks.
Okay, thanks very much, Margarita. And Bradley, what do you think will drive Business Insider's coverage?
I can't necessarily speak for our entire publication, but we obviously have people that cover politics and policy, so there'll be, I'm sure, lots of things written about that. Just as the straight up political stories, the what happened on the trail type of pieces. For my coverage, I know it'll be focused around how people are positioning, but also obviously a lot of the big names in the hedge fund world are involved in politics. Their wealth gives them that ability. So supporters, detractors of the current president, of Biden, there's big finance names that are on both sides. So kind of tracking that and seeing where the money flows.
Okay, we'll look on to that with interest, Bradley. Thank you. And moving stateside, Richard, obviously you're based out of New York. What do you think will perhaps drive institutional investors coverage, and is there any things that you might be looking at yourself?
Well, it's a little bit above my pay grade here, but I know from my perspective what I'm going to be looking at, although I'm interested in the donation side of what's going on and who's backing which candidate. I'm also interested in some of the economic policies as they become more, particularly with regard to the Biden campaign, as those are fleshed out, because they're currently not very well articulated and strong. And I think that they will become going forward. And, there's less than 2 months for that to happen. So I'm going to be keeping my eyes on that. Institutional investor has actually, sort of been focusing, I guess you'd say, since it stopped its print publication and moved online, has been focusing more on exactly what its name is, institutional investor, and looking at things from that perspective, as opposed to pulling far back and saying, how is this going to affect the economy, for example? But I still think there's plenty of opportunities to kind of, as I said, look into who's betting the two different horses, who's putting their money there, and also what the implications of particular tax and economic policies in particular, in the zero bound global economy that we're in.
Sure. No, obviously there's some very interesting themes to develop there, Richard. Thank you. Before I turn to Peter, I'm going to ask Tom, who has I think a family wealth publication in the U.S. market. And what are some of the brief things that you might briefly be able to explain to us that you'll cover in the run-up to the election?
Well, I will be looking, there'll obviously be some asset allocation implications for which, depending on how the polls play out and what the likelihood, what the results are from this, that will be something I would obviously cover. But in advance of it, we're going to be taking a closer look at the tax implications of either candidate winning, because clearly with a lot of our readers are looking after not just high net worth, but ultra high net worth individuals who are often clients of multi and single family offices. So estate tax, the implications for the trusts industry in the US, with all the 4 or 5 main jurisdictions in the US, like Delaware, New Hampshire, South Dakota, Nevada, about what they'll be doing. There's obviously some tax implications to think about. There'll be an impact on the philanthropic sector. There's a lot of philanthropy that we write about, particularly the ultra high net worth end, structuring around foundations and so forth. There'll be some implications from that, depending on. But other than that, there'll be some business sector investment rotation that might be thought about. I mean, my readers already mentioned renewables. There's sort of energy policy, obviously. There may be some others where there may be some implications from US-China trade relations. A Biden presidency is rightly or wrongly seen as going to change the dynamic, whether there's actually more bipartisan agreement on China than people actually are willing to admit. And I can't see a Biden presidency, assuming we get one, being much more friendly to China actually immediately than people think. But nevertheless, trade policy and the effects that will have on certain sectors is something we'll want to have a look at, because so that really is that really. I don't really, there may be some, I don't really see much else that I'll be looking for. It's mostly going to be about tax actually and asset allocation.
Sure. Excellent. Thanks very much, Tom. Finally, Peter, obviously Breaking Views has a long-standing bureau in New York City, so you'll be having, as it were, local coverage and local analysis on the ground. What are some of the things that you think will shape Breaking Views coverage of the 2020 election?
Yeah, so we're in the fortunate, I think, position that we don't engage in sort of pure political commentary. So we will not be endorsing a candidate or kind of trying to express a sort of a straight view one way or the other on who should win. But obviously there's a huge amount to unpick. So I think we'll be paying quite a lot of attention, not just to the presidential election, but also to the makeup of both houses of Congress. And then through that prism, really looking at, at some of the issues that are going to be sort of pivotal for the election, and also that may pivot as a result of the election. Tom mentioned China and tax. I would add to that, the regulation of or not of big tech companies, I think, is a huge issue that could be influenced by the outcome of the election. And then I think, but I think there's just a sort of a broader kind of question about the impact on U.S. institutions, basically, and the U.S. Constitution, particularly if it's a close result, particularly if the current president decides that he doesn't want to concede defeat, for example, or if he wins a narrow victory that is somehow contested, I think that could get really messy. And also we'll be just thinking quite a lot about what that means for the rest of the world, you know, for international institutions, for trade relationships, for geopolitical tensions and so forth. So lots of angles to look at there, but I think very much trying to think of it in terms of sort of the likely consequences of the election rather than trying to, I think, engage what would probably be a fairly futile attempt to try and guide people to one outcome or another. Or to predict it.
Absolutely.
I think we're definitely not making any predictions.
I see. Well, that may change though, but we'll watch that space, Peter. Thanks very much to all the panelists for your very insightful answers. I'm going to pass over to Anthony now, who will wrap up.
And so, yeah, thanks, Bill, and thank you very much indeed to all of our journalists, Eric, Tom, Richard, Margarita, Bradley, and Peter. And thank all of you listening very much for attending and for your questions. We hope you found this webinar useful and actionable, and you now feel much more prepared and excited about engaging with journalists. And if we didn't answer your questions, don't worry. We'll be back to you via email. And we'll also come back to you with a video recording of this webinar, the presentation slides, and a write-up of it. In our next webinar, we're going to be launching this year's edition of our Global 100 Research Report, which is the benchmark for marketing performance of the world's leading asset managers, sharing best practice and insights, taking stock of key trends, all of which is of vital importance as we come in to the 2021 planning season. So until then, goodbye for now from all of us at Peregrine in London and New York. Goodbye.